Welcome to the deep dive. Today, we're looking inside the often kind of wild world of crypto trading.
Yeah, we've got some really interesting personal updates from a listener.
Right, and we're going to unpack their experiences, navigating the ups and downs, especially with Bitcoin Cash.
Exactly. So we're using their own account, their reflections on trading BCH mostly, and some Bitcoin too.
And our aim here is to really get a feel for their journey, the emotional side, the financial side.
And maybe pull out some key lessons, right? For anyone else thinking about crypto or already in it.
Okay, so let's start at the beginning. This trader put in $500 USDT into Bitcoin Cash BCH last year.
Right, USDT being one of those stable coins pegged to the dollar.
But then, while crypto happened, their investment dropped pretty dramatically, like 50%.
Yeah, down to $250 USDT, maybe even a bit less. And that really hammers home the volatility.
It absolutely does. A 50% drop in just a couple of months is, well, it's significant.
It is. And it shows these aren't just abstract numbers. It's real money, real impact. The market's young, speculative. Stuff moves fast.
So fast forward a bit. Recently, BCH saw a little bit of a price increase, a small pump, they called it.
Brought their holdings back up, but only to around $300 USDT.
So still down $200 from the start. And naturally, the focus shifts to trying to recover that loss.
Yeah, they started trading again, specifically aiming to get that $200 back before even thinking about, actual profit.
And they did manage a tiny recovery, like $3.
3 USDT, yeah. But as they pointed out themselves, that's not profit yet. It's just chipping away at the loss.
It highlights how slow that recovery process can be, just focusing on getting back to zero.
And it's interesting psychologically, isn't it, that break-even focus? Sometimes I wonder if that focus itself can maybe lead to slightly riskier trades just to speed it up.
That's a good point. This trader, though, seems quite self-aware about the market itself.
How so?
Well, they mentioned realizing that the market doesn't really care about personal plans.
Ah, yes, that the market does what it does.
Exactly. And they talked about being a sincere follower, learning from how it moves. There's a certain humility there.
That's super important, recognizing you can't force it. You have to adapt. That's a core trading skill, really.
They also have this strong belief in Bitcoin Cash specifically, called it best and trustworthy, their favorite.
Okay, so real conviction there.
Yeah, and they plan to hold it through downturns, basically waiting it out for future gains.
That conviction, whether it's from deep research or just a gut feeling, definitely shapes how you handle the dips. Suggests a longer-term game plan.
And they're quite honest about where they are in their journey. They call themselves a crypto trading learner.
Because they're not consistently profitable yet.
Right, and they factor not just the money, but also the time lost, which I thought was interesting.
That's a very grounded perspective. Time is definitely a factor.
But they also see the upside in mistakes, saying they gain the quality of gainer every day by making new mistakes.
I like that. Framing mistakes as learning. That's a growth mindset, especially valuable in something like crypto.
Then there's the emotional side. Huge factor.
Always is in trading.
They admitted it's really tough controlling emotions after, waiting and watching the market.
Especially when it doesn't go your way. Yeah.
And they know that getting a handle on those emotions is like key to actually becoming a consistent gainer.
Absolutely critical. That emotional discipline, managing the fear, the greed, it's arguably just as important as the technical analysis sometimes. Awareness is the first step.
And just briefly on their current situation, they mentioned other coins they hold are kind of stagnant right now.
Yeah, not much movement, so no real opportunities to buy more at the moment.
So the plan is to wait for a pump in those smaller holdings, sell a little bit, mostly for practice.
Makes sense. Using smaller trades on existing holdings to keep learning while the broader market is quiet. Practical.
So summing up, what we've really seen is, well, the stark reality of crypto volatility.
Definitely. And the emotional roller coaster that comes with trading, managing those expectations, those gut reactions.
Plus the role of maybe a longer-term view, that personal conviction in what you hold.
And that constant learning curve, even just tracking your mistakes is part of the process.
Okay, so here's something to chew on as we wrap up.
Go for it.
In a market driven so much by tech, but also, by human feeling, by sentiment, how much does that personal conviction in a coin really influence success versus cold, hard market analysis?
That's a great question. And maybe. Is that whole journey, the learning, the recovery attempts, the mistakes, is that process itself just as valuable in the long run as actually hitting that profit target? What do you think?